Glad to have you join us once again on the program Economy in Focus. As the name implies, the program focuses on the economy. We discuss everything that has to do with the economy, talking about capital market, stock exchange, and more. Well, I am your host, Eugenia Solomon, and today on the program, we are looking at the topic understanding the Central Bank of Nigeria's monetary policy decision, the implication for the economy. And joining us today to dissect the topic of discussion is a financial inclusion expert and a financial inclusion expert, Bolade Idakolo. Hope I got the name right.
Yes, correct. Thank you for having me.
Glad to have you on the program. Well, before we delve proper into the conversation, let's take a look at the background. Now, the monetary policy, that's the MPC of the Central Bank of Nigeria, CBN, recently held its 300th meeting and decided to retain the monetary policy rate at 27.50%. This decision has significant implications for the Nigerian economy. And this program aims to provide insights and analysis on the decision and, of course, its potential impact. Now, I'll first of all start with this question. What would you say are the key factors that influenced the that's the Monetary Policy Committee's decision to retain the MPR at the said amount, that's the 27.50%, yes?
Actually, if you look at the performance of the economy and most especially inflation, that has been the yardstick for determining whether there will be an increase or there will be an hold, you discover that inflation is, even in April, down from the 24% that it was to down to 23. It shows a sign that the policies of the central bank is improving the economy and is taming inflation as it may. We also discovered that other measures that the CBN has been taking has started yielding fruits to correct the economy to a large extent and to ensure that the economy starts bringing forth the expectations of Nigerians as it should. So looking at the decision of the Monetary Policy Committee to hold the interest rate at 27.5%, it's basically to look at how the economy continues to react to these monetary policy parameters and see how far they can go to see inflation come down even further in May and April or the second quarter of the year.
All right. So, how will this decision affect inflation, economic growth, and of course employment in Nigeria?
Presently, if the economic statistics that we are seeing continues the way it's going, there is probability that inflation will ease in May and June as well. And looking at the economy itself, apart from the high rate of interest rate that are being charged by deposit money banks and other financial institutions, that is really affecting cost of doing business, you will discover that the economy is stabilizing, and all we just need to do is to see how we can reduce the MPR gradually further as inflation eases and other parameters improve. And also looking at unemployment, with a very sound and strong economy, employment will improve and increase, and more investors will be interested in doing business in Nigeria, which we have started seeing, and other sectors will also open up for business, thereby boosting employment. So there is the stability of the economy is very critical to these factors as regards employment, as regards the strength and the health of the economy, and also as regards the cost of doing business. If the economy continues to improve based on the policy formulations of the Central Bank of Nigeria, and it starts reducing the cost of doing business, starts giving a very clear and beautiful investment climate, it will draw in more foreign investment, and local investors will also expand as well, and it will improve employment.
Okay, so what would you say then are the implications of the recent decline in crude oil prices for Nigerian's economy, and how can the country mitigate these effects?
The truth is that the volatility in the crude price is expected, and every country like Nigeria that makes budgetary allocation based on crude oil revenue must also put that in perspective. I believe that Nigeria put a baseline when the budget for crude oil production and crude price was being cut in 2024. And looking at what is happening now, before we used to have what we call excess crude account. The excess crude account helps to boost shortfalls when we have situations like this. But the excess crude account has been stopped for reasons best known to the government. So when you have a situation like this, what it does is that it reduces revenue stream that comes to the government, and also can affect infrastructural development, which most likely will happen if there is no enough funds to cover it. So reduction in crude price will definitely affect the budgetary projections of the government, and also the revenue earnings that is expected from crude. So what the government needs to do is to ensure that it takes from other sectors, or look at other opportunities to be able to to plug the shortfall or reduce expectations in infrastructural development. And that will not be good enough for Nigeria, because we are trying as much as possible to boost infrastructural development to improve our economy.
All right. So, how effective have the government's policies been in boosting local production and reducing, of course, foreign currency demand pressure?
It's wonderful that this government has tackled a major challenge headlong. Some people might not know, but based on the hardship that we are facing now, that is very imperative to remove the arbitrage that is in the exchange rate, because that is what is making some people to become midnight billionaires. And that is what the government has done. It has made to show the true strength of the naira, so that we can know where we go from here. And looking at that, the CBN came with a policy to ensure that the naira is strengthened, and that is why you see the various policies of ensuring confidence from diaspora. That's why last year the Central Bank of Nigeria tried as much as possible to instill that confidence, reapproach the money transfer operators, give them so many incentives to make sure for them to have confidence in the economy, and as well as ensuring that the backlog of forex payments that were due to the aviation sector and other sectors were cleared as at last year. All this brought confidence to the economy, and it brought reapproachment from some of these organizations that their funds were trapped initially, and their business improved as well. So when you look at presently what the Central Bank of Nigeria is doing with the government plan on small scale and medium scale businesses, you will discover that based on the pronouncement of the president to ensure that there is a single digit loans for SMEs, it has started being implemented. We have also seen that even the student loans is also being implemented, and also in the digital space, you see that many more people are coming up with government support and other seed investment into it to expand the digital space. So looking at government policy is focused and is targeted at SMEs, because if you look at the whole gamut of business in Nigeria, SMEs constitute 65% of the whole business, before you talk of in the industrial companies and the rest. So we need to strengthen the SMEs, and that is what the government is trying to do, to ensure that capital availability is projected towards the SMEs, to ensure that they are also able to expand and also have a stake in the economy of Nigeria. Because before now, most of the SMEs have lost a lot of grounds, in the sense that when you do not have capital and the little you have is being eroded by cost of doing business, most of them folded up 3-4 years ago. But things are improving now.
All right. So we'll take a pause here for a quick breather. The program, Economy in Focus, will continue shortly. Stay with us. so glad to have you back right here on Assets Television, where you're watching the program Economy in Focus with me, Eugenia Solomon, and of course, our guest in the studio, a financial inclusion expert. And why do I want I just love to add titles, more titles to that. But
That's
he's a
wonderful.
financial inclusion expert, Bolade Idakolo.
Thank you.
I would love to hear that the name actually from your, is it Balade or Bolade?
Bolade.
Bolade Idakolo, with us actually dissecting the topic of discussion today, which is understanding the Central Bank of Nigeria's monetary policy decision implications for the economy. So, right here, we will continue with the conversation, and I would like to ask you, what role do you think the Central Bank of Nigeria can play in sustaining the stability of the banking system and, of course, promoting economic growth?
Actually, when the new administration of the central bank came in and was chaired by the governor, Oluyemi Kadoso, it came with a very clear policy objective. And the policy objective is to first strengthen the banking sector, sanitize the banking sector, and it ensures that the banking sector reduces the high level of infractions that have been in the past. Because when you talk of infraction, there are so many things that are happening that the banks, one way or the other, pay fines for, whereas there should be regulatory framework to ensure that it doesn't even happen in the first place. So this new administration of the central bank focused 80% on the banking sector, while leaving the other sectors to ensure that the banking sector comes out strong. And part of the policy that was first initiated was the banking sector capitalization that will take place next year, to ensure that the banking sector is strong enough, has the adequate capital capacity to be able to push the business or to push the economy to the expectation of the government. The Nigerian government expects that we should be dealing with $1 trillion economy by 2030. How can we do this if we do not have banking sector that has a very strong capital base to be able to compete with its peers in Africa and the world? So that is why the focus, so much focus was on the recapitalization of the banking sector, ensuring that policy guidelines, frameworks, risk mitigation are all put in place to ensure that the banking sector applies the basic principles of banking and make sure that every guideline is followed to the letter. And that is what we see this new CBN administration enforcing, to make sure that every bank is strong enough, is prudent enough, and is solvent enough to be able to do business in Nigeria. And so far so good. We discovered that even before the 2026 recapitalization process, some banks have met 80%, 90% capitalization so far. And a large number of these banks in Nigeria presently will likely scale the recapitalization model to strengthen the businesses. Another thing that I want us to know is that in the policy framework of the Central Bank of Nigeria, monitoring is very, very key. And that is why you see that most banks today, they've adhered to the guidelines because of the constant monitoring of the various departments that need to do their work to ensure that every bank is on this stool to put out what is expected of them and to serve the Nigerian public as it should. So the policy measures of the central bank towards the banking sector so far in the past 1 year has strengthened the sector, has brought in more confidence into the banking sector, and has positioned the banking sector for a bigger share of Africa's economy and the world at large.
So, how will the Monetary Policy Committee's decision impact the foreign exchange market?
Presently, if you look at the strength of even the foreign reserve, you will discover that the Nigeria's foreign reserve has strengthened over time, and some of these policies to ensure that there is FDIs into the country, that foreign direct investment is yielding fruit, and also some of the policies of ensuring that there is adequate reduction in exports, in import than export, has also paved way for us not to be spending so much effort on exports. And we have seen that playing out in the petroleum sector, where there is less import of petroleum products, that has made the so-called FX to be used in critical areas to ensure that the economy stabilizes. Because in the whole forex usage in Nigeria in the past, the petroleum sector takes about 70% of forex usage. But now it has reduced drastically due to local refining that has been a very stiff competitor to the importation of petroleum products. And also you see that there is also focus in ensuring that the FDIs that are coming in are the ones that stayed for a long time, not the ones that are they are called volatile funds that come in and they go off as they like. So the central bank has ensured so far to make sure that the foreign exchange stabilizes, to ensure that naira regains strength. And how can naira regain strength? Is by ensuring that we have enough foreign reserve to meet our export obligations as at when due. And also when we have presently Nigeria is doing over 40 billion in foreign reserve. By the time Nigeria can do close to 100 billion in foreign reserves, like other countries that are petroleum exporting countries that have strong economy, I see the naira coming down, the exchange rate coming down drastically to make the naira gain more strength, because the strength of the naira is dependent on the reserves that Nigeria has.
Okay, so what then are the prospects for the naira in the short to medium term?
Presently, the naira will maintain its position, the present strength. If you look at the current exchange rate of the naira, is hovering between 1,500 to 1,600 and something to a dollar. In the short term, the naira will continue to maintain this position without coming out of that gate, because of the present policies of the government ensuring that the foreign exchange market stabilizes and there is enough forex to meet obligations. But in the medium term, you will discover that with more inflows coming in through FDIs, through exports, Nigerian export, to show up our FX expectations, it will make the naira to gain more strength in the next 3 to 6 months. If the projection of the government improves, and with the policy direction of ensuring that Nigeria does not import what it can produce, it will reduce the amount of forex that goes out of the economy, and instead increases those that come in. It's very noteworthy that even in 2024 we had a positive balance of trade surplus, which has never happened in the past 10 years. It's based on the policy of the central bank with the fiscal authorities that has made that to happen. And we are looking at a situation whereby it will happen as well in 2025. And when we continue to have balance of trade surplus, it means that it will strengthen our local currency and make it to be able to buy so much.
We're already in mid-2025.
Definitely, we can do it.
It's all right. So what then are the potential risks and challenges associated with the MPC's decision?
The risks are far-fetched. One of the risks is the fact that presently Nigeria is the cost of doing business in Nigeria is very high because of the MPR. The MPR, if you know very well, the MPR is the baseline which bank uses to give out facilities and loans. And when the MPR is saying 27.5%, for example, when a bank wants to give out facilities, it will climb on that, and it will go to 30 to 35 depending on the kind of facility it is. So when we have an MPR that stands at 27.5%, for example, we are looking at banking sector giving out loans of 30 to 35%, and that will increase the cost of doing business. And these are part of the risk of, we will now run the risk of repayment risk, and we also run the risk of ensuring that the business survives when we have that kind of high interest rate. And also, if nothing is done, some businesses might close down based on the pressure of facilities that they have taken. But on the flip side of it, when the MPR is maintained at that rate, it will strengthen the economy in a way to bring down inflation, because more people will be interested in bringing money into the economy because of the interest that they are going to generate from it. And when more foreign investors and local investors are interested in the economy, it means that the economy will be awash with funds, and there will be more to share, to do business. So on the flip side, when it continues this way and we are able to look at fiscal policies that can address the manufacturing sector, because it's not only the interest rates that is affecting the manufacturing sector and SMEs. We have the issue of energy security and others. When those issues also are addressed, it can help to strengthen the economy.
Okay, so how can these risks and challenges be controlled or mitigated? Let me use that word, mitigated.
Yes, one thing that we need to know is that the central bank itself and the fiscal authorities should be doing quarterly appraisals and review of how the economy is faring vis-a-vis the key sectors of the economy, how they are responding to policy guidelines. And when we look at how they are responding, it can give the government their ideas and ways and means to be able to see how to meet the economy, to be able to ameliorate some of the challenges that they are having. Apart from the quarterly reviews that needs to be done, the economy also needs to be strengthened, and the confidence instilled in the economy. Last year the administration of President Bola Tinubu decided to give tax waivers to pharmaceutical companies that are bringing pharmaceutical products, drugs to the country. We all know how expensive drugs are in the country. But when there are tax waivers, it's going to affect the bottom line of the cost of the drugs. So when we have some concessions that are given in some key areas to manufacturers, to SMEs, it will also help to boost profitability, to strengthen the business, and also to improve on the economy.
Does that mean the cost of drugs, there is that possibility that the cost of drugs will reduce?
Definitely. If, for example, there are waivers on tax waivers for importation of drugs, for example, or materials that are used for drug production, definitely it's going to reduce the cost of production of those drugs. And cost of production is a factor that affects the pricing. So when the cost of production reduces, it's going to affect the pricing.
Okay, so how does the CBN's decision fit into the broader macroeconomic framework?
Presently, the CBN is playing a major role, and we are seeing that despite the headwinds that we are seeing in the economy, the CBN in the past 1.5 years has managed to stabilize the economy, to steer it away from imminent collapse of the past administration of the central bank. So we see that the CBN has, to a large extent, stabilized the economy, to improve the microeconomic indices of the country, to make it a beautiful bride. The president spoke last, I think this week, that Nigeria is now a beautiful bride for investment. This is a collaboration of the good job that the central bank is doing in conjunction with the fiscal authorities that is making the economy to look appealing for investment.
All right, so can you tell us the implications of for fiscal policy? The implications, yeah. What are the implications?
Now, the fiscal policy side has always been a challenge, because that is where you have the other side of the success factor for economic growth. The fiscal policy is run by the ministries of finance and other agencies in conjunction with government policy. And we know how government policy can fluctuate. We know how we can have policy somersault. And if this is not put in check, it will clash with the monetary policies of the central bank and will not allow us to have the effect that is expected. But so far so good. There has been a very good collaboration with the fiscal authorities, with the monetary side of the economy, and that's why we are seeing the improvement we are seeing so far. Because if, for example, the CBN makes these policies out and the fiscal authorities are not supportive, it will not be effectively implemented.
It's all right. Well, here is where we draw the curtain on the program, Economy in Focus. A very big thank you to our resource person. Thank you so much for your insights today. Mr. Bolade Idapulo, thank you so much for being here.
Thank you.
And to you, our great viewers, thank you so much for always being there. Don't forget to always keep update with us for inciting episodes of the program. I am Eugenia Solomon. Thank you for watching.